Here to discuss the federal rate decision yesterday, we have Eric Vanraes from EI Sturdza. Eric, let's get straight in then. What was your reaction to the decision yesterday?
Yeah, my first reaction is that they did nothing and we were expecting this status quo. The statement was very interesting because first and foremost we were expecting that they could maybe change the wording, the characterization of growth from modest to moderate, and they didn't do that. So growth is still modest, not moderate. In addition, they removed a very important sentence. I will read the sentence to give you exactly the sentence they removed. They removed that recent global economic and financial developments may restrain economic activity somewhat and are likely to put further downward pressure on inflation in the near term. So it means that 1 month ago, Mrs. Yellen made a mistake, and the markets reacted a lot, and she understood that she has to correct this mistake because she added more uncertainty, and the markets obviously were expecting less uncertainty. So they remove the sentence saying that Chinese slowdown and emerging markets development could postpone the first rate hike. But at the same time, they introduced another sentence.
Of course.
So it's not clear, because they say that they are still monitoring global economic and financial developments. It means that they continue to perceive that there is a risk to growth and inflation, and that's my view. Because last month I was surprised, because obviously the Chinese slowdown is a concern and emerging markets are a problem, but the mandate of the Fed is not to rescue emerging markets and to solve the problem of a possible Chinese slowdown, hard landing. But to be honest, I think that the first problem of the Fed is the US economy. Because, let's be honest, 2 minutes. You are FOMC member, we are FOMC members. Inflation is around 1%. It depends if you take core inflation or the global CPI, including the oil prices.
Yeah.
So let's say around 1%. Unemployment rate, 5%. And growth, around 3.5%. So what are you waiting for? You should raise, and not only one rate hike, but at least 2. So why did they do nothing until now? I think there is a problem somewhere. They know exactly the situation in the US. That's why they say that growth is still modest and not moderate. And they are very, very, very cautious, because they know that the next recession could come. Statistically, it will come in 2016, but statistics, you know, they are not. It's not an exact science. But and the problem is that they are still afraid that they will have an empty toolbox once the next recession comes in the US. That's why they open the door. They still open the door for a first rate hike in December. But I don't think it will happen, because there are 2 conclusions after yesterday FOMC. The biggest reaction was obviously the euro dollar, 109. That's a major problem, because can you imagine that everywhere around the world, all central banks are easing? We will see a huge QE in Europe, a very, very dovish policy of the Central Bank of China. And everybody around the world is trying to ease the monetary policy and to decrease the value of their currency against the dollar. And the Fed will be the only one to raise rates and to risk a sharp appreciation of the dollar against all the major currencies around the world. It's and I told you before, I had a look at the earnings of many US corporates, Coca-Cola last week and PayPal yesterday evening. And the statements are always the same. Sound growth, everything under control, we are very happy, but unfortunately we are penalized by the strength of the dollar. And in my opinion, it's a major issue because the strength of the dollar could be the first factor that could provoke the recession in the US. I don't know, nobody knows, but in 1 year, 1 year and a half.
Okay, so what about for the new year? When are you expecting them to act? You mentioned being very cautious at the moment and you think they should raise maybe at least twice. What do you think will happen?
I think that unfortunately they will have to stay dovish next year. So there are two solutions. First solution, they still wait and see, and they don't move. And somewhere after Q2 next year, they will implement a QE4 or maybe go into negative rates. Or they, because Mrs. Yellen, she promised it, so now she has to deliver. They will vote for the first rate hike in December or early next year. But I think that this decision should be what I call it Jean-Claude Trichet 2008. You remember in July 2008, the ECB rose the ECB key rate in July 2008, and a few months after they had to decrease it again. So I think that to raise the rates in December or January, or to do nothing, it's not the main issue. The problem is what will they do in 6 months, 9 months, when the US economy will start to show the first signs of decline.
Okay, Eric, thank you very much for your insight today.
Thank you, Sam.
And thank you for watching. Be sure to click back to Dukascopy TV for more updates and exclusive interviews. We'll see you next time.